Hello, everybody. It's Monday. It's DCA time. We're here. It's live, and this will be about the bull market that never was. And is that a bad sign or a good sign? And how much further could we fall? Things are not good out there, but there are a few glimmers of hope. We're going to get into it today, and I want to thank everybody for coming. Thank you, Mando, CTO, and Marty. How are you
Thanks for
guys all
having
doing
us.
today? Yeah, Marty, alive and well.
Oh yeah, this is the best time of the year for me. I love this.
You're
This
going to
is
piss people off with that comment.
That's fine. I mean, I've been in here since 2017, been through many of these cycles, so it's different. I understand for new people it's difficult, but this is a novel asset class. It's unregulated. Participants are coming in all the time, bigger and bigger participants, which means they have more influence. And this is part of the game. I mean, until we see 91, 800, I don't think there's any need to panic. So we'll talk about it on the show today. But guys, this is for me the opportunities of the lifetime, especially these altcoins, the ones that we know are good. I think it's the culling of the shit. Anything shit won't survive.
91 800. We'll come back to that number in a little bit. CTO, you hanging in there?
Oh yeah, I'm pretty great. We'll look at some charts later.
Yeah.
So yeah.
And Mando, what's going on?
I'm okay. We did close below that 50-week moving average level, which means that I did de-risk a decent amount this week. But let's see how the next week goes. If we can try and reclaim it, maybe we hold on to this bull market for a little bit longer. It's definitely a precarious point of the market right now.
And we will talk about that 50-week, because one thing that's been very clear ever since the ETFs launched, even before the ETFs launched, everything is different. Nothing is the same. The 50-week, etc., was typically a trigger of the bear market, but we never had a bull. So then, again, go back to my whole thesis of last week. If we never had a bull, are we going to have a bear?
James, I'm thinking an important discussion. Obviously, it's CTO. Let's hear from you first. But what is a bull market in crypto?
Yeah,
that's what we need to know. What does that mean?
It's definitely more than 0% return in a year. Let's start there. But let's get into a couple of things first. Let's talk about the agenda, and a big thank you to everybody for being here. Question is the bull market dead? And first of all, 95% of Bitcoin has been mined. Only 5% left for the next 120 years. I think that in itself is big. If Bitcoin is ever a thing, if it ever becomes global money, etc., 95% is gone. And that is a profound amount. Not gone, but mined. Anybody have any thoughts on that? CTO.
Yeah, I mean, absolutely. I have not changed my opinion about Bitcoin at all in like the long-term perspective. But at the same time, it is a speculative asset to a large extent. And I think it's important to realize that at the same time. It is more speculative than assets which you can kind of calculate how much it's worth in a way. Here it's different. Like it's not like an asset where you can calculate how much profit does it make and how much is that worth and so on and so forth. So it gets inherently more speculative, and I think that's what we're seeing here.
Yeah, good point. There is something else as well. Unless anybody has any comments on 95% be mined, I think that is a massive milestone when you consider, if you imagine long-term holders didn't sell anymore and other people just held, how the hell is Michael Saylor and the ETFs, how are they going to fill their bags? That's the question. And the question is, when will things pop off? We saw gold pop off. Let's look at this. And this is part of the kind of story as to, well, Bitcoin, it has arguably been in a bear market all of 2025 so far. It's lost 40% to gold. And for years, people have been calling Bitcoin digital gold 2.0. And here we are. Gold has smoked it. 40% is big on that pair. Mando, Was this on your bingo card, on anybody's bingo card, for gold to be so strong and for 2025 to absolutely suck like it is?
Yeah. No, obviously I've been wrong about the idea that we would catch up with global liquidity, catch up with gold. We've lost correlation to pretty much everything that we had traditionally, which was normally just this is a correlation to global liquidity and you need to treat it as such. It has broken down, I think, most likely because of the 4-year cycle, but it's very difficult to just pin one narrative on it because the other stronger narratives just have been ignored. But I think you just have to respect the market to a certain extent. At this stage, it's been drifting lower, and now it's starting to break some of these longer-term cycle-like indicators. I just think that, yeah, you can just kind of wait to see what the narrative is about why this is breaking down so much. But I've been very surprised, very, very surprised that we've broken away from gold and from stocks so much.
Yeah, and I know a lot of people were very excited about the correlation with global liquidity, like you said as well, and that has held firm for nearly a decade, and
A long time,
it just completely smashed as well. Marty, any thoughts on traditional indicators, traditional correlations, all out the window?
Yeah, I mean, we have to go back to basic fundamentals. Understand that there is a global mistrust in government and in financial institutions. So I think crypto was seen as an alternative and remains an alternative. I don't know what other alternatives there are. You have to either use the banking system or gold. So I think because of the gold pump, it's clear that a lot of people have rushed to gold and have not rushed to Bitcoin as much. And then, in my opinion, it's quite simple, and that is that when Trump got inaugurated, we were at 68,000. Typically, we ran to all-time high at 126. And in my thesis, you have to always expect a potential 50% pullback from that move, and that's 81,000. So in my opinion, anything between 81,000 and 91,800 is pretty normal territory. I'm not sure why everyone is freaking out. Honestly, James, I am a little confused.
Okay, I do have a theory on that, Marty. Yeah, I have a theory on that.
Yeah, go ahead.
All of the, I'm not going to list, well, I will list names. The Kathy Woods, the Tom Lees, all these people saying $250,000 by Christmas 2025. Over and over again, up until as recently as a couple of weeks ago. This is what dashes people's hopes and dreams. This is what pisses people off because they're looking at their Bitcoin.
I'm not sure why they're listening to those people, James. Why are people listening to people who have no idea what crypto even is?
Because they're on CNBS all the time.
Right.
And it keeps getting repeated on Twitter, and people get excited. And that dashing of those hopes and dreams is what's making people so angry right now.
The sad part is that retail, like I said before, we need to analyze, and I'd like everyone in the room here to give their take on this. What is a bull market in crypto? What makes a bull market? Retail, right? Everyone says retail makes a bull market. But let's understand that retail have no money. There's $1.25 trillion of credit card debt. People are overextended everywhere. We're living through a recession. We've just been lied to from the macro numbers. I think we've just lived through a bear market, in my opinion. When we get new liquidity, which December 1st is the official unwinding of QT, which means the government has finished selling securities off their balance sheet and will begin buying treasuries. And we know what treasuries are. It's stablecoin. I think this is all just a massive shakeout before the bull run. And I'm still sticking with that thesis. Until QE, I don't think we can have a bull run. So in my opinion, we've never had a bull run. This was just an institutional catch-up.
Yeah. CTO, before we get to the items of no bull run, no liquidity, no recession is clear as day, we'll show some charts on that. We'll also show a potential couple of glimmers of hope. But what are you seeing, my friend, in the crystal ball?
Yeah, so here's the chart, and it's now almost 4 weeks ago since the trend turned down. A large line flipped blue here. 21st October. Before that, we had the first worrying sign. We talked about it then, but I think not so many people were interested to listen here on this Monday show. I think it was the 13th, that we had this fake out that looked exactly like the fake out we had in 2021. It kind of ran above the previous all-time high, closed above. It was like a legit breakout. Everyone, including myself, very excited. Then like 2-3 days later, it looks completely different. Starts smelling like it was an orchestrated fake. Then the 10th of October was this liquidation, which we don't see so much in the Bitcoin chart, but it was the biggest liquidation event in crypto history that day in the altcoins. And it seemed perfectly orchestrated. Then shortly after, the trend did turn down. Large line flip blue, and down we went. So, I mean, there has been signs in this chart. I cannot say that I predicted that it would dump, but I did get worried here. So, you know, it's a difficult time, because for me personally, in my own investment, this is great since I avoided much of this. Now, the lower the better, if I can find a way to re-enter. Sometimes that's not possible. If it shoots up tomorrow, okay, then that's a problem. But I'm hoping that there will be some controlled way to re-enter. The problem for many people now is that they held through this whole dump, and now they are offloading. But that's like 4 or 5.
Did you sell everything, CTO? Did you dump all your Bitcoin? Or just a tiny
I have
piece
reduced my exposure gradually through these kind of negative events. So I have like a scorecard approach where I feel that I'm getting less and less confident in the health of the bull market here. But now I'm not selling anything. Now it starts feeling late. So my worry now is that most people, they held max exposure through this whole thing. And now they are starting to, you know, try to short to make it all back, or they're selling everything here and so on. But now it might be late, especially if people start shorting here. Perhaps, you know, they run it back in a huge candle again. So I'm not shorting anything here. Right now, I'm doing as little as possible. And I think it's a very risky to try to, for example, short now or sell everything now. I think it's kind of late.
Exactly.
It's late in the game to
I want you not just because I know what people are going to say is like, oh my God, CTO dumped all his bags, but give people perspective when you de-risk. Was it you took 5% off or 10% or what? So
yeah, I'm probably 65% in cash here right now.
Oh, you sold 2/3 of your Bitcoin, or you had cash?
No, for the whole crypto exposure, not only Bitcoin. But of course, it's also. I mean, if we get amazing buying opportunities, say that we actually go much lower. Marty, what did you say? 84 or something like that. Say that we go to like impossible levels.
I mean, the 50%.
I'm going to like take other stuff and put in there. So, you know, I could put even more in it if we get better opportunities. That's why it's really hard to talk about percentage.
If we take back half of the Trump pump, that's 81,800 is half. If we take back the 4-hour 50%, it's roughly 91,800, which is the lower liquidation levels. So those two are the key levels. I mean, I've always been 40% in cash. I've been very transparent about that, waiting for this. You see, it's very strange to me that people haven't been waiting for this. If there's it goes up forever philosophy, then you're listening to the wrong influencers, you're following the wrong accounts. Nothing goes up forever. Who said it would just go up? It doesn't go up forever. Institutions bought it up, and retail is taking the opportunity to exit, and why shouldn't they? These are people that probably bought Bitcoin at $20,000. They're taking profits. That's perfectly fine.
And 35% drawdowns are the norm in historic cycles as well.
100%. I don't see anything out of the normal here, James. I'm not sure why people are freaking out.
Well, again, I think the big problem is the terms like Moonvember, Uptober, all that type of stuff dashed. People were clinging to, oh, we're going to do really well. It's Q4. And Q4 historically has always done well for all markets, not just crypto. This is
Exactly.
one of
I'm gonna
the
give up.
okay. This is one of the glimmers of hope. This is the PMI against Bitcoin, and PMI in the United States is basically manufacturing strength. I know, Mando, you're very familiar with this one. Why do we care? Because rising PMI means economic expansion, more liquidity, stronger economy, more risk appetite. And everybody expects this to pop once the data gets over the lag because of all the data center build out for AI and everything else. And it's also important to note that we had a very long period of depression in this PMI. Basically, manufacturing was dead for years, for 26 months, I think, if I'm not mistaken. Now, it's primed to break above 50, which means everybody starts waving their flags. It's abundance, it's economic expansion, it's tons of liquidity, etc. after this record long contraction. All the macro experts are talking about PMI going to pop soon. Now, why do we care? Because when PMI pops, Bitcoin pops. Mando, to you and your experience, is everything just out of sync? Has the whole cycle moved again? And do you believe in we saw the failed correlation with global money, liquidity. We saw the failed correlation with gold. We saw the failed correlation with the NASDAQ. Here we go. Number 4. Fourth time's the charm.
This is the issue that I have with this is like, if I start to look at correlations, then we've broken. In fact, the Wintermute actually did a study on this last week, which is we've correlated with stocks the worst possible. Like, we only ever correlate with stocks on the down days, never on the up days. It's like,
no, it's 100% right. 100% right. Yep.
We only have downside correlation to all these assets at the moment. So it's really difficult to work out what is actually going on, because if you're following which it makes sense, right? Money printing was the original reason for Bitcoin, right? The idea that we needed a harder currency that wasn't just going to be inflated away. That has continued. Japan today announced $150 billion stimulus, or it's very, very close to it, as it looks like it's about to go into disaster mode. Stocks seem to be holding up okay. Gold continues to go higher. It's just been crypto, which is really what maybe I've been wrong on. Like, I can put my hand up and just say, like, I didn't think that the 4-year cycle was going to be a thing. I really felt like we would just continue with the correlation with macro, with this sort of stuff. And the 4-year cycle has just been a thing. We've had big whales come in and sell.
Okay, but I mean, Mando, can I make a point? How can that happen if we have $140 billion of open interest on unregulated exchanges long? How can it just go up forever? You think those exchanges are just going to carry longs forever and go bankrupt?
Yeah, actually, let's talk about this, because you jumped onto it, Marty.
Until we have regulation in the perp market, which is the market in crypto, it's giant compared to the asset prices. Talking a magnitude bigger.
Yeah, well,
there's
Mando,
no way
Marty, yeah,
very long.
look at
Exactly. Go ahead.
Marty, you know this chart. Look where all the liquidity is right now. Okay, do we go left or right? There's nothing but crumbs on the left. To the right, there's a truckload for the market makers to grab. Which way would you go as Wintermute?
I would run it and take out every long there and then run it back and use that liquidity, and all the liquidity I've gained. Binance has $45 billion of USDT they've accumulated in liquidations. I can only imagine what the other exchanges have, which is what they power to make the bull run. They liquidate people to get the liquidity to put the price up. That's how it works. That's the cycle of crypto until it changes. So yeah. I think they will flush that 91,800. You can see it clearly there. And then we'll turn around and run up. And that's the short squeeze. Happens every time. This is how it works.
Mando, what do your tea leaves say regarding this liquidation here chart? Which way would you go?
It's very difficult to look at something like this. Obviously, it looks like the shorts have been built up there pretty high. And even if we were to go down, I expect us to have liquidation wicks to the upside. If everyone remembers who's been here through bear markets, like some of the liquidation wicks on the way up can be pretty horrific. I catching a falling knife when some of these longer term trend indicators start to go can be more difficult. I think the one thing that has been more worrying has been the DAT trade unwinding. Every single aggregated crypto asset which has got a DAT to it is now trading below 1, I think, on an aggregated level. So all the ETH DATs in aggregation are trading below 1. Bitcoin, all the different L1s. That trade unwinding. I don't think it's going to be that big for Bitcoin. Actually, people get worried about MicroStrategy. I'm not really that worried about MicroStrategy, but remember, 10% of all the ETH was bought via these DATs and the ETF in the last 6 months.
And their average prices, and Mando, their average price is $4,200 per ETH.
Right.
So they're all 1,100 bucks underwater right now.
So that trade, which was meant to which did propel the upside, will also propel the downside if this turns. So again, the only thing I really want to buy here is Bitcoin, because the idea of catching full knife, I mean, I've been saying Bitcoin for a while now. I thought Bitcoin dominance would be the thing, and you want to hold it. So luckily that this breakdown hasn't been that bad, but I wouldn't be buying alts here, particularly not some of the major L1s. Zcash maybe looks okay, but pretty much every altcoin that I follow has been breaking down to new lows, even versus Bitcoin. So I think it's a really dangerous time to be considering. You can just wait for the market to show itself, as CTO said. Like we can just kind of wait to see if the market bounces, and then I think I'd get back in. But I'd only really be buying Bitcoin on this dip.
Wait for the trend to reverse.
I mean, James, can we just go back to the PMI correlation? I mean, I think the reason that for people in the audience who don't know what PMI is, it's the Purchasing Managers Index. It's basically a leading indicator that shows the health of a country's manufacturing and services sector, correct? So
Manufacturing.
It's manufacturing.
Services, yeah.
The US has no manufacturing. They pushed it all overseas to China. So it's at an all-time low, in my opinion. It requires liquidity in order to re-industrialize. That is the next stage of the US's history book.
Well, there's two wild cards. So manufacturing also includes things like building data centers. And there's a crap ton of that happening right now. There's trillions, literally trillions coming into the US to build these data centers, which includes concrete, electricity, all sorts of.
But the point is that it's all extremely sensitive to liquidity.
Yes, exactly. And that's going to pump liquidity.
Correlate to PMI because they're both extremely sensitive to liquidity. We're at an all-time low in liquidity. We printed money in COVID, and they've been bleeding it out ever since. Literally, there is no money in the system.
Yeah.
Until there is new money, we ain't going anywhere. They're right now culling it off until the new liquidity comes. When the new liquidity comes, they will reindustrialize and assets will go back to where they were.
Yeah.
That's my opinion.
And the QT, all this is, and again, goes back to, Mando, what we discussed and Marty earlier, is that liquidity was gone for years. QT was in play. QT is ending, if it hasn't already ended, at the very latest December 1st. What does that mean when QT ends? The money printers fire up. As Mando pointed out, Japan's going to print 150 billion. When the rest of the world sees Japan printing, they say, we're going to print some more too. That's just what happens. But we had the breakdown in correlation with global liquidity. When's that going to come back? So this is our fourth and final correlation. If this doesn't happen, we're then we just throw in the towel. But there is
that's
one other
what
towel.
I'm saying, though. I threw in the towel this week. Like when we broke down below that level, that was the level I was like, similarly to TTO, I missed a lot of what I needed to.
Yeah. All right. This one, JP Morgan.
This one is good. This is good.
Okay. Now, JP Morgan are, I used to call them psyops because they try and talk markets down. We were promised storms in the S&P 500 over the past 4 years. The worst hurricane ever. It never happened. They do try and talk Bitcoin or gold in different directions. But this guy, Nicholas, I can't even say his name,
Paniguricosgulu.
Yeah, it's a tough name for me. He did say in a new report that the current price right now, 94K is the Bitcoin bottom right now. We are $200 away from that as we speak. And Bitcoin's going to avert a bear market. He didn't maybe give the exact reasons, but he did say within a year, $175,000 because, again, size to gold. It's cheap. So, as CTO, we'll go to you first. I know, Marty, you've got a lot to say on this, but what do you think about JP Morgan? Are they being a psyop, or do they have a basis for this?
Yeah, so I mean, one thing that everyone has to understand, no one knows what the market will do next unless they are the person buying or dumping it with such size that they can actually control it. And I don't think JP Morgan has that either. So no one knows for sure. So like the only thing I would really like everyone to take with them from this is that don't open huge leverage longs or short and try to, if you lost money, don't try to make it back in a stupid way because, you know, JP Morgan said something. They might be right, but you don't know that. We don't know that for sure because we don't know the guys who have been selling how much they have left. So that would be my first comment. But they do have a good point on the gold to Bitcoin. I have a chart as usual. If we
put this up, man.
So if we start in detail, it looks really bad here, right? So this is Bitcoin price versus gold price. It's trending down. It tried to bounce, it couldn't. So it's just down and looks really, really bad.
And it's down 40% year to date. That's how much Bitcoin's
exactly.
lost. Huge.
So it's down a lot. But if we zoom out like this, we can see that Bitcoin versus gold has, attacked the same level many times. 2021, 2021 November, almost here. Again in 2024 December, again in 2025 January, and again now in August 2025. Couldn't punch through. But perhaps it was close to where it turned last time. And if looking at this, it has happened so many times, probably it will try again. That's patterns tend to repeat. So if it has attacked so many times, good chances that it will happen one more time. And at one point it will punch through. And that could be a reason then for the price predictions that they have in their report.
Exactly. There's 23 ounces of gold per Bitcoin right now, and their 170K target correlates to about 40. So this 40 ounces per Bitcoin is the normal range where it typically should be at. Mando.
I believe the 94K relates to the cost it takes to produce Bitcoin.
Cost of production, correct.
Yeah. So what they're really saying there is that the incentives for miners drop away post there, and that's generally been seen as a rough bottom for Bitcoin at all times, like the cost of production, essentially. So, which I agree with. Like, I don't think Bitcoin is going to keep falling through the floor, basically. But I am wary of altcoins here, for sure, particularly ones with big DAT trades behind them.
Okay, so Mando, 94K, 93K, give or take a couple of thousand floor.
I'm not calling the floor on Bitcoin. I'm just saying. I don't think it's going to keep on falling through the floor. I don't think this is going to like 70, 60K. Like, that's just not what I think is going to happen here. I think you'll have, and I've having traded some of these sort of TradFi markets for a while, the fact that TradFi is on board and if they see something drop 20, 30, 40%, TradFi buys. Like, they're a different sort of investment class that they'll see this as an opportunity rather than, oh my God, this is going to zero. And I think Bitcoin's got enough behind it that will help. So
that's true, actually. But
that trade is less of a big thing for Bitcoin. Like, MicroStrategy does own a bit, but it's not enough.
Yeah, it's true, because I've had phone calls just last week. People have been watching Bitcoin for 10 years, and then they say, well, it's 25,000, 30,000 off the all-time high. Is now a good time to buy. So yeah, they're bottom fishers. They exist out there. So that's a very good point, Mando. I like what you're saying. So let's where do we go next? There is one other thing that is kind of interesting, and that is DEX volumes. Despite the fact that everybody's been murdered and smashed, I can't remember the exact numbers, but $250 billion was lost so far in liquidations in crypto in 2025. And they say 70% of retail investors that perp got wrecked, which is a stunning statistic. But this chart here, which is kind of mind-blowing, shows us that the perp DEX volume is still alive. So we have Solana doing 32 billion a day, Ethereum 24 billion a day, Binance 20 billion, Hyperliquid 4 billion. This is crazy DEX volumes on chain. So people are still degenning. Any degens out there? Mando, you're nodding your head. It's like, yep. They
I
keep
think
going
this
back
is
for more.
I think this is going to be one of the main innovations of crypto is the perp. It's going to be expanded to other assets now, including equities, commodities, maybe to other different RWAs. If I was to predict, I would say that like equity perps are going to be one of the biggest financial assets of the next 3 to 5 years. Like you should always be looking at protocols which are being built at the birthplace of that moving to RWAs, which is why Hyperliquid is an interesting trade because it is like the epicenter of that potentially. So I don't think we're not seeing the death of the perp here. I think we're only seeing that perp volume chart is only going up and to the right over the next 3 to 4 years.
Yeah, it's funny because, you know, we've seen with the betting markets, the poly market and the Kalshi, etc., people are betting on everything. And there is a theory as well that I believe that the retail investor in the past used to just YOLO into Bitcoin. Then they started YOLOing into alts. Now they're YOLOing into betting markets. Now they're YOLOing into AI. They're buying nuclear stocks, quantum stocks, etc. Might be a good point. CTO, do you believe people or these other shiny new asset classes or these ability to bet on different assets have taken some of the oxygen out of the Bitcoin room?
I think it's a great insight by Mando here, actually, that, I mean, perp is such a great product. It's so great to use in so many different ways. And if that is coming down to equities and other assets, that makes these platforms very interesting, obviously, because perhaps they will get a big share of that business in the end. So that makes me actually more interested in these perp platforms. I think that's a key takeaway from today's show. But has that taken juice away from Bitcoin? I feel that I'm not so sure. I think that maybe it's more other asset classes, perhaps like AI stocks and other things.
Yep.
Gold, perhaps, like people have FOMO'd into gold.
Yeah, but I don't know if the typical retail Bitcoin investor has done that. Some of the older ones for sure have definitely done that too. So let's get back to basics. 4-year cycle. Dead, delayed, different, going long, ended a year ago. It was a 3-year cycle, 4-year cycle's dead, or is it a 5-year cycle? Or if you look at the data, you know, it could just be a slow grind up, you know, and the CAGRs of 39, 40%, 50% of Bitcoin are gone. The compound annual growth rates now it's maybe just a trudgy 10, 12, 15%. Mando, I see you smiling there, Riley.
Because I've been so wrong on this. I was just like, oh, the 4-year cycle is going to be, you know, this is dead. And honestly, the 4-year cycle, I think, coincided with maybe the first or second week of October it was meant to be. And that's kind of what the top was. It's kind of, it was kind of exact moment. So like, I just think that the OG Bitcoiners basically said that's going to be the case. Now, what I would agree with what you're saying, James, is I don't believe this is now going to be a sustained bear market. Like I cannot think that we will continue to diverge from global liquidity, gold, equities for that long, just
PMI.
because it makes so fundamental, makes so much fundamental sense as the driver of crypto. But were they right about us breaking down? Yeah, 100%.
And my other theory, and keep me honest here, maybe Marty and CTO, and well said, Mando. I think the OGs, okay, many of them are in at $10, $100, etc. They got their little stopwatch on. Okay, we hit 1,054 days. Sell. And as you know, Mando, from your recent trip to Asia, they all talk together. It's like, dude, I'm selling half of my bags. I'm selling 10,000 Bitcoin. What are you going to do? Well, if Johnny's selling and Susan's selling, I better sell half too. I don't want to be left holding the bag. And then they're diversifying into AI and everything else. So that's clear as day what's been happening. And in fact, I think it was Jordi Visser says a lot of the selling is actually coming out of Asia. It's the Asian OGs that were in on the mining a long time ago.
Chinese miners, I think. Chinese miners.
Exactly. They're just taking lifestyle chips. Marty, what do you say to that? 4-year cycle dead. OGs, will they continue selling or are they done? Did they have the stopwatch on for 1,050 days or whatever it was?
Yeah, I think all the cycles have changed. I think that Bitcoin has now become part of the monetary system, and these major blue chip chains are being, the execution layer of the digital dollar. It's all Stephen Moran cycle stuff, Stephen Moran's playbook. I think 100% people have taken profits, and why shouldn't they? And I'm quite surprised that it hasn't dropped lower. I think that the perp market is definitely the controlling factor right now in the price. Remember, crypto is decentralized, but the price is not. The price is the most centralized thing of all. It's controlled by a couple of platforms that can say whatever the price is they want. Also, there's multiple prices of Bitcoin. Every exchange has their own price of all crypto. So it's highly manipulative. So until there's regulation, market structure, you can see the urgency to pass it by the US, and it's not going to be easy. Once there's this structure, I think the perp market will change. I think the chart in Bitcoin will change. The cycle will change. I think everything will change, in my opinion. I think it's the most critical piece of regulation in crypto history. And it's not spoken about enough, other than people like David Sachs and Paul Atkins, who talk about it all the time, and Loomis.
So Marty, it seems like we've got a lot of stuff stacked up for 2026. We've got PMI is going to grow, QE is going to happen, there'll be more rate cuts, there'll be more liquidity.
I think we'll return to more of a fundamental valuation instead of a speculative valuation based on a manipulated, gambling casino. Basically, the more people that go long, the lower the price will go because they're liquidating longs. And the same is true the other way around. It's just a hunt of liquidity. Now, the question is, where's all that liquidity going? We have 45 billion sitting in Tether and Binance's wallets. Think about it all. There must be at least, a couple of hundreds of billions of dollars that they've taken from retail in liquidations in this unregulated time. What are they going to do with that money? Now, most people will say that's the money they use to power the next run up. They buy assets. And so if that's the case, then, they've done it to perfection. It's been the greatest cycle for the perp exchanges of all time right now.
It's interesting because Tether as well, they had equal bags of Bitcoin and gold. Now they got 13 billion in gold and about 9 billion in Bitcoin because the Bitcoin price has fallen off. CTO, 4-year cycle, dead, long, short, done.
Huge thank you to Mando. It was when we were on the show when you came back from Singapore and said that you had talked to those guys and they said that they were selling because of the 4-year cycle. That's actually when I started getting worried because there are so many arguments why 4-year cycle doesn't matter anymore, right? Fundamentally, there's not that much mined anymore, so the actual supply difference doesn't matter so much in proportion to that. But then if people think that it's repeating, it becomes self-fulfilling because then, like you said, James, they set the stopwatch and think that, oh, great, this has gone up from 15K to 100K plus. That's great. Let's sell and call it a great trade. And perhaps that's what happened. I think the only reason it hasn't tanked more because it's only down little bit, right? At least so far. We're talking about, what is it now? 20, let me check exactly. It is down exactly 26%. And I think the only reason it's not down more is that Wall Street has been buying some of this that has been sold by the OGs. I feel that is clearer and clearer what has actually happened. So,
This guy just bought nearly 8,200 Bitcoin. And that means if you had to calculate Satoshis per share for MicroStrategy, you just went up 1.26% overnight from their most recent buys. So CTO, the money is changing from the old OGs, maybe the Chinese miners from back in the day, to TradFi, ETFs, Sailor, etc.
Yeah, in my opinion, James, I think the big buyers now coming into the market that have finally accepted this asset class are JP Morgan, Vanguard, and State Street. And they're not going to pay the top, guys. They're not going to buy the top price. They're going to demand a major discount. And that's part of the cycle is we get bigger and bigger believers, more conviction. Banks are getting involved. These are big buyers. And if you buy with size, you get a discount. And this is part of the game. I mean, it's stronger hands. It's just stronger hands. Weaker hands are leaving. Retail have the weakest hands of all. It's a hard lesson to learn. We all go people, but people sell. People are not really investors. They're still in crypto to make more dollars. They're not trying to accumulate tokens. They're trying to increase their bank balance. And they leave fast. They panic sell. And they need the money. I mean, we've never been in such a, I believe we're borderline depression on the streets of America right now. So I think that's the situation. And just like JP Morgan jumped in 1907, just like they jumped in 1929, just like they jumped in 2018, 1971, 2008, great financial crisis, they jump in at the bottom. And I believe JP Morgan and Vanguard, who just announced as well, that they're now entering. And next will be State Street, and you should expect discount. But
That's right.
They're stronger holders. So, look, crypto is volatile. If you can't handle volatility, it's not for you.
Yeah.
That's
And you're right. Vanguard are coming in, and they have decided to stop blocking the Bitcoin ETF. And Vanguard are massive. They're no more Vanguarded from Vanguard. But just to point this out here, this bag is nearly 650,000 Bitcoin. Because so much Bitcoin is lost and locked up in Satoshi wallets, there'll never be more than 15 million Bitcoin, which I've been saying for years. They now own 4.33% of the Bitcoin supply. One firm. If this thing ever catches on, I know the DATs tried, and Mando, you pointed out the DATs are hurting right now. The danger is if some of those DATs sell, but it doesn't really matter because this is the only DAT that matters. The rest have crumbs. Even if they dump all their bags, it'll have no impact. But this is the big one to watch here. So... And I know they're
Bitcoin.
trading
Sorry, you go.
They're trading at a 7% premium to the Bitcoin bag right now. MicroStrategy. Sorry, Mando.
Yeah, I mean, MicroStrategy, I still think is in the crosshairs of this story, but it's not the worry for me. It's more I would say it's more the ETH ones, if I'm honest. Like the ETH ones, they don't have this multi-cycle stock to them. They've all just recently been created. I think Bitmine just got a new CEO today, which normally isn't a great sign.
Well, that's what's crazy about Tom Lee. And
Tom Lee's staying on, but he's not the CEO.
He's a chairman. Yeah. My worry was, his reputation is dashed in Wall Street if we don't see ETH getting back to like $4,500, $5,000. And I really hope that does happen. Because right now he's $1,100, $1,200 underwater. And this is kind of an interesting one too. And I am so confused by this statement from Kathy Wood. Maybe you guys can help me explain this. She said L2s will outgrow ETH, but she just invested more into Bitmine last week, which is ETH. But now she's saying the L2s are going to smoke ETH. I remember saying that for a long time.
James, like I said earlier, I don't think these talking heads really even understand crypto. I don't think she really understands crypto. Honestly, I don't think so. I don't think she really knows what an L2 is. Same with Tom Lee. And remember, when Tom Lee's pumping crypto, he's trying to buy it at a low. Everything above the floor of crypto is just perpetual speculation. And that gets removed. We just saw that. We're trying to find the floor prices. And I don't think these people really understand crypto. I don't think Kathy Woods understands crypto.
Well, it's funny because I just checked. I checked on Base this morning, and if you look at the money Base is making compared to the money ETH is making, it's equivalent. And Base
exactly. I was just going to say that. I mean, of course, I don't know what she's thinking, but the statement probably alludes to that, right? That Base does Base really need Ethereum? Why not do an own chain, for example?
I think those issues have been with ETH this whole time, right? We've debated ETH being a worse chain, and I think we've kind of come to the conclusion that obviously as an L1, it's pretty bad. But this whole technical now of the main buyer of ETH being ETFs and DATs, and it went from 1,500 to 4,500, and now all the DATs are turning over, and MNAV is below 1, and the ETFs are starting to see outflows. Like, I think this is a really dangerous period for ETH. I really do. And that's why I also think it's a bit dangerous period for alts, because I look at this and go, if this trade goes the other way now, I don't think there's ETH OGs coming in to like buy billions and billions that were just bought. So I think there's a lot of focus right now on that DAT trade.
Yeah, very, very good point. Because as I said for years now, since 2024, crypto is no longer a retail game. It was institutional and treasuries. Treasuries are
Correct.
it.
And we don't know the OTC prices, right? Remember, the market prices you see on Binance are retail prices. The OTC prices are very different. I mean, you've got to understand OTC prices are probably where we are now, minus 10%. They're buying with stars, they're getting discounts, all of them. And you must take what they say with a grain of salt.
And that's a good point regarding OTC, because I do look at the average buy price for people like Sailor. He bought every single day last week. His average cost was nearly 102K a Bitcoin when the average price of Bitcoin was 96K. So when he goes to the OTC desk, they're charging him $7,000 a Bitcoin premium. Ballpark between 6 and 7, my math. And that sounds rich. I mean, I wish maybe we should just go on to Coinbase and Binance and try snag some there, but that would spike the price completely, of course. There is another interesting story too that people are worried about. This is maybe a potential race to the bottom of what's going to happen with crypto, because Solana keeps on aggressively lowering transaction fees, aiming to commoditize all forms of smart contract execution. This will drive massive adoption, and this is going to bring Wall Street to the whole space, the tokenization of everything, when you can do it for free, which is huge in a verifiable way. And it's going to make blockchain usage extremely affordable. But people are worried that what's it going to do to the rest of the blockchains that depend on revenue to make money if you can't make it up in size? And that is the number of transactions. I think Toly said on last week as well, you probably heard this. He said, Solana does more transactions in a month than Ethereum has done in its entire lifetime. But the problem is, could this impact all of crypto with the race to the bottom around fees, basically making everything almost free? Any thoughts, anybody? CTO? Maybe take a telco analogy, perhaps.
I think that it's not really the fees that's driving the price. That was something I realized when was it 2018 or something. Someone calculated if people only bought, at that time it was Ethereum. If people only bought the Ethereum when they needed it for gas.
Yeah.
And they bought it then and only then. How much would Ethereum be worth? And it's basically nothing, because there's enough Ethereum for gas, basically for everyone. So I think it's the same thing now, and it's even more so now because the gas fees have gotten lower. And I think if everyone here are looking to yourself, how much Solana did you buy because you had to make the Solana transaction? And how much Solana did you buy because you think that the price will go up? And I think if everyone here do the exercise, you will realize that 99.9% of the Solana you bought was for speculative purposes. So I think the same thing is true now. So I think it doesn't matter so much if the fees drop even further. It's not really about that. It's like this idea that you buy a stake in the protocol. And it's actually the same thing for Bitcoin. People buy Bitcoin not to pay the fee to send the transaction, but buy it for speculative purposes. And the idea is that you have a stake in the success of that protocol. It's not a stock really, because you don't get dividend in the same way, but it's kind of the same idea. So I think it doesn't really matter. It's going to be the chains that are most successful, that have the most momentum, and also that's what's driving the price, not the fees.
Yep. Winner takes most. Marty, any thoughts on the fee wars and the impact? Because it is a real problem.
Yeah, I mean, look, Western Union, Zelle, Venmo, Cash App all announced that they're going to be using Solana. So at the end of the day, it doesn't make sense if it's not near free. So it's the only option. There's no other blockchain that can do that. So we all knew this would happen. Solana will be the backbone of, the global economy with regards retail, purchases, integration with Web2, movement of money, the new cash. There's no other technology to do it. But it comes with a cost of zero fee. I mean, you can't have fees. It doesn't work otherwise. So we've always known this. This is not new to me.
Yeah.
This is part of what Solana's vision has always been: tear down Wall Street and rebuild it with no fees. That's the whole point. But with volume comes value, and network state becomes value. Wells Fargo will have to run validators. Zelle will have to run validators. Cash App will have to run validators. Those are large, long-term reserve holdings. That's the game. And at the end of the day, it's going to happen. Just a matter of time. The most important thing with Solana, and people misunderstand, they always say to me, Marty, ETFs just got approved. Why is the price dropping? Because ETF issues are not going to pay market price. They're getting discounts for their baskets. They're going to push the price down as low as they can. So you have to expect that. This is all part of the expectation. I think this whole notion of price always goes up is a big problem in markets. And go look at Amazon in the first 4 years.
Oh, yeah.
It's dropped 95%.
Yeah. And by the way, anybody who bought that Amazon dip made 35,000%
Exactly.
or something wild. Yeah.
So you got to look at the fundamentals of the software. You got to look at the adoption. You got to look at the use case. Stay away from the price at this point. We're still early. I keep telling people that.
This triggers a very interesting question, Marty, and this is for the technologists here, CTO and Marty. A lot of people say, oh, well, if Amazon wants to start doing blockchain transactions, they can just build their own L1. Can you talk about how difficult it is to do that, to build a global state machine?
Yeah, this idea.
Possible.
Sorry, CTO, go ahead.
No, CTO, you
Go
go
ahead.
first.
Yeah, so I mean, this idea has been around many times. It's inherently difficult, and the global protocols tend to win. So that's the bottom line. And why is it like that? People have written, thesis this thick on that question, but that is the bottom line. We had this idea with IP networks, with telecom subnetworks, and all of those things. In the end, it didn't succeed. Nothing of that made it. It became the global protocols, the TCP/IP, the internet, the global mobile protocols, 5G, and so on, that won. And I am absolutely certain it's the same thing here. It's the global protocols that win, and it will be the global blockchain public protocols that win, not Microsoft's blockchain, not Amazon's blockchain. They might all try. They might have one each and push it a little bit, but it fizzles out for a long list of reasons.
But to play devil's advocate, Coinbase create their own L2 on Ethereum, and they make all the money. And they take all the transactions away from Ethereum, and all the concentration of wealth for the whole blockchain now is gravitating towards the L2s, just like Kathy Wood said. So this goes back to what we always said. The L2s are cannibalizing themselves. But is that like a mini version of a canary in the mine of a business building their own blockchain?
I mean, of course, there can be a business that is the primary advocate of a protocol. Like in telecom, we had that. We did that. But you kind of have to, in some way, have it public enough. It cannot be like, this is our proprietary protocol, because then at the end of the day, it dies at some point. So, but it's a balance. Can they, same thing with BNB, can they transition that from being like a Binance protocol to a public protocol? Ripple tried with XRP, not that successful, but it's the same idea. Can Coinbase do it? Can they actually make it a public protocol that people see as public? Don't know, but that's what they're trying to do. They're not trying to say that this is our Coinbase protocol. They're trying to, because they know this same thing that I'm saying now. It's not like a secret. So they know that they have to get it into a public protocol where they have some influence, perhaps. And it's a fine line. Can they do it? Can they not do it? Remains to be seen.
Yeah, I mean, there's a whole lot of factors. I mean, I've been around private blockchains for a lot. I pretty much built the first sort of decentralized physical network back in the early 2000s with Oracle. Misunderstand that building a private blockchain, you're really not, you're just recreating the same trust problems you already had. They make no sense. The whole point of blockchain is to create an anti-fragile system, a point with no single point of failure. So centralized blockchains, they just missed the point. They always try. Look at JP Morgan's Onyx, look at R3 Corda, Hyperledger Fabric, IBM even have their own one. They all fail because We already have a centralized database system that works perfectly fine. The whole point of blockchain is it's public. It's open source. So the costs are lower. The cost of starting your own L1 to compete with something like Ethereum or Solana will be probably approaching hundreds of billions of dollars, the maintenance of which will be billions of dollars a year, whilst right now it's all outsourced to the public domain. So
And
it
the
makes
network effect is hard to build as well, to get the validators and
I just
stuff.
think it's once again going back to that key point we said in the beginning. The education of the people that are now getting into crypto in the institutions is very low. They're still learning. I always say they're about 9 months behind us.
Yeah.
I think they're about 9 months below. They're still working it out. The first thing they do is they say, we want to make our own. That's just the nature of capitalism. But they don't quite understand what this is. And they will understand. I have no doubt about it. But right now, to create your own blockchain doesn't make any economic sense. There's no use case for it. You're not improving efficiency in your corporation. In fact, you're adding expenses. Makes no sense at all.
Yeah. All right. Thank you for that. So people will not be spinning up their own blockchains. Let's talk about AI for a second. Live right now, we got Google up 4%, Tesla up 4%, Alibaba up 4%, all AI plays. AI is going up, crypto is going down. A lot of people did the rotation, me personally over the last 18 months as well, out of elements of proxies, DATs. Didn't sell enough, but sold enough to impact things on leaps, etc. But this is from NVIDIA. A lot of people are still talking about the AI bubble. And Jensen Huang is saying there's no bubble because AI manufactures intelligence in real time, which means every query consumes fresh compute and forces system to scale its GPU base as usage grows. Limiting factor is electricity. But this is just, a lot of people still compare the AI so-called bubble to the dot-com bust of 1999-2000. Mando, do you believe Jensen? Jensen's been on the money on this from the very beginning since 2021, 2022. Do you believe the scale for demand for knowledge will continue?
I don't see a dip in the demand for GPUs. I see maybe a question around whether they're being used effectively or maybe or the overall capex spend. But for now, I just think that the competition between them all is too tight and too aggressive for it to be a dip. So I think even in a sell-off in AI, I actually think NVIDIA would be one of the strongest. I think the question is more are the people who are spending massive amounts on capex necessarily going to be able to catch up with revenue after this? So I'm not worried about this imploding. It does feel a little bit shaky though. I have to say the last few weeks have definitely felt more shaky on this, and I would be unsurprised if we have a little bit of a wobble here in AI stuff.
And there's lots of players that are on very shaky ground, like OpenAI and others knocking on the government's door, almost looking for money, talking about an IPO. They need incredible amounts of money, and some of them are running out of that. And there's no doubt winners take most, which means 80% of the players in AI will be casualties, and some of them are going to start dying off the vine right now. Marty, any thoughts on the AI demand?
100%. I mean, I think an important point to bring up, there's a couple of narratives that are taking center stage now, I think influencing everyone's decisions in their allocations and their portfolios and their overall view of the market. The one is, like CTO Larson said, I think people are convinced there's a 4-year cycle. So they're trading accordingly. They believe it's the top. They believe there's going to be a bear market. I think the second one is the correlation to the 100-year cycle. The fact that in 1925 was the beginning of the crack, which created the 1929 stock market crash, which created the Great Depression. And everybody is saying, well, that was caused by a speculative bubble, right? They let everyone buy stock, created a bubble, blah, blah, blah. So this is the same thing. AI is a bubble. Everyone will tell you buy the dips, that whole narrative. And the third one is, I think the price always goes up narrative. For some reason, people think prices always go up. Which is just not true. If you take those three narratives together, I think you can explain the market. In my opinion, I think we have had a bear market. It's all about the duration of the market. I think we have accelerated bull markets, accelerated bear markets as the cycle increases. the repetitions and oscillations will increase. But overall, this is no different to the S&P 500 after the Great Depression. It did the same movements. We're a novel asset class. This is how it works. And so I think AI is no different. I think AI is definitely not a bubble. Maybe in the early days it was a bubble, but right now nothing has changed on the earth other than technology. If you remove technology from the human race, we go back to the caveman days. So I don't believe that this stuff will go away. I think Moore's law says CPUs and network latency will come down, networks will improve, and CPUs and GPUs will improve. And I don't think that's changed. What we have is a rare earth problem. The manufacturing of these chips has now become politicized. And this whole government shutdown, we've had a disruption to the flow. And like Raoul Powell will say, it's pushing us back maybe 6 months to a year. And we're all feeling that right now. And in that lull, I think everyone turns to those narratives. Oh, this must be the top. Oh, this must be the 4-year cycle. Oh, this must be a 100-year bubble. Blah, 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 blah. And so what can I tell you? You need to make your own personal decision. Do you have conviction or not? Do you believe in technology or not? Do you believe in AI or not? That's at the end of the day the way it has to work. Because they're all novel. These prices you see today are not the prices next year. These are today's prices.
Final AI story. We'll get back on the AI train. But Elon Musk is launching Grok 5 in January. He said it has a 10% chance of being AGI. If that is true, the world will radically change in January. Now, Jeff Bezos is somebody who likes to compete. Elon Musk does space. Jeff has to do space. Jeff just got out of bed for the first time, I think, in 5 years since I think he retired in mid-2021.
Didn't he just go to space, James?
They landed their first rocket themselves, and he sent his girlfriend up or something, or some singer, I don't know. But they were low orbit. That's like going for a high airplane type of thing. But they're catching up. But again, he just got out of bed to start Prometheus as a co-CEO coming out of retirement. So much for married life. He's going back to work. But they've raised about $6.2 billion to create some type of AI play to improve how tech products, computers, cars, spacecraft work, which I think is kind of interesting. So for him to come into the game at this stage of the game, invest a ton of his own money, and raise $6.2 billion, kind of interesting. What do you think of Jeff Bezos, Mando?
I think he's a smart guy. I'm a big fan of Bezos, actually. So if he's come back in, and he does not need to unretire, so he must think that this is a massive opportunity. Let's see.
Exactly. And he likes to win too, or at least compete. CTO, technologist getting out of bed from happy married life and retirement to going back into the fray.
I mean, AI is exciting. There's no doubt about it. And I mean, it's definitely not a bubble. I do think there will be crazy price swings. What I think could play out, it's a scenario we can prepare for, is the narrative that it's been like that it's been too hyped, that it's gone too far, and that people have bought too many GPUs and they don't need that many GPUs, and prices like dump. That could be a narrative to drive down the prices. If that's happening, I think that's the opportunity to really, increase exposure in AI. Now it's just gone up in a straight line. I'm talking about NVIDIA here. Very little dips, very little entry opportunities since basically 2023 February. That was the last entry, basically January. Exactly. Since then, it's just been straight up. So, but I think if that happens, you start seeing newspaper articles that people have bought too many GPUs, they're not using them, they don't have power because they don't have rare earth materials, as Marty said, and all those things. And NVIDIA stock starts tanking, and people saying that no one needs to buy any GPUs for a long time and so on, and price tanks even more. That's when I'm going to increase exposure to NVIDIA, because I think this is exactly like the internet. There's going to be a .com crash where some companies go out, and all the companies, including the best ones, tank massively, and that's the time we shall load up. Now it starts feeling late, honestly,
Exactly.
to start buying now.
Yeah. And 6 months ago, Bitcoin was $75,000. Like to remind everybody, Nvidia was $88. It's $100 more expensive right now today. Let's finish with a little bit of a fun image from Ocean. Don't know if you guys can see this. Hang on, remove.
I mean, I can do my final spiel on AI if you want.
Yeah, sure.
I mean, in my opinion, it's all about controlling the narrative, right? Everything is a narrative. Everything you do is a narrative, okay? At the end of the day, any human can get in any car, any in the world, and they know how to drive it because the steering wheel's the same, the clutch, the gearbox, you drive on the left side, you drive on the right. These are narratives. There's 100 ways for us to have done it here on the planet, but narratives are created. The narratives last typically 100 years. AI is the new definition of a narrative. This is these new technocratic Gen X's trying to control the narrative. And AI is the tool to do that. They are fighting. It's an arms race for the next narrative. We know Elon Musk is extremely passionate about this. He tried to buy Wikipedia to own the narrative. So this is a race to own the narrative, the next narrative for the next 100 years. And Moore's law says microchips are only going to get faster. I think this propels NVIDIA. I don't see anything. If NVIDIA drops, like CTO says, I will be a buyer. 100%. Same with Tesla. I think you're dumb if you don't buy Tesla and NVIDIA dips. But I think there will be a coming to Jesus moment for this ultimate all-time high on the stock market, and zombie companies will be taken out. Remember, guys, 7.7% margin to GDP is the critical number. We were at 6.3 in 2024. We got to 5.3 now with the Trump tariffs. We're pulling away from the danger zone, in fact. So there's a lot of wheels at play, but I think ultimately AI is a quest to own the next narrative.
Yeah, this is a funny little meme here from Ocean as well. To wrap up, I want to thank everybody for coming. Jamie Dimon, anything ever comes out of his mouth, beware indeed. And I don't know if I can share a second one. Stop sharing. Boom. This is another funny one. Just have to.
I think Jamie Dimon calling the 94 to 170 is, you must understand, JP Morgan have been around bailing out. They buy the bottoms since the beginning of time.
Yeah.
I think it's an extreme prophecy. 94 to 170. Let's watch it play out. Let's remember today, November 17th. 94 to 170. Go ahead.
And a lot of people are still calling for a run into year end, but they're the same people that said 250K. So that's all. This is the feeling right now. I think we all have. Anybody who doesn't feel this way, congratulations. But I want to thank everybody for coming. Big shout out. Don't forget links below for this whole team, or below. You can watch on all our channels. Big thank you to Mando, Marty Party, CTO Larson. You guys rock. Hang in there. We'll be back next Monday, and hopefully.
Yeah, get through November. Get through November, guys. December 1st, massive changes in monetary policy.
Yes.
This is all part of the process. Just hold. Just hold.
Let's see if we get a correlation. We can't have every single correlation break. Isn't that right, Mando? Something's got to stick.
Just remember, when you sell in the US, you owe a massive tax obligation. You always have to factor that into your sell price.
Yeah, exactly.
Go ahead.
All right. Thank you all. Have a great night. Great week.
Adios.
Take care. Bye.
11 more days. Wait.
Thank you.
And NVIDIA earnings, by the way, on Wednesday, I think, if I'm not mistaken. That could interrupt everything too.